All right. Hi, everyone. It's April 30th here, last day of April. This is the second weekly installment of This Week in Finance and Investing. Thanks for coming. I'm here to just kind of show you the things that I look at in investing for the week. I've actually had a bit of a busy week. I was over at Princeton on Friday. That took up most of my day. And then I've had various other sort of things get in my way during the week. So this episode will be a little shorter, maybe than normal, but what I'm going to ask you guys to do is shoot over some questions. So this way I can go through the Q&A after the fact instead of during, or I guess I'm prepared or whatever. I have the questions in advance. So just shoot your questions over to that email address. It's martin@thotpatrol.com, and that's my email address, and you'll go right to me, and I have the that email right here, so I'll just read from here in order, and hopefully there'll be some interesting questions. Okay, so please do that so I have a little bit of time to save for the other half hour. So let's make sure that we remember that we're going to finish up here about 9:40 p.m. So thanks for your time in advance. All right, so the first thing I'd say is that Trump tax cuts are pretty impressive. I'm pretty surprised that the president would make this very kind of strange, not politically savvy move to actually lower the tax cut for corporations dramatically, but not necessarily lower the tax rates for individuals. But despite the political maybe lack of appeal, the practical appeal is the right exact move. I think that corporations' tax rates make having U.S. corporation relatively uncompetitive to the rest of the world. So it was sort of, I think, very impressive that he had the guts to kind of make this his platform. And I think that you'll see a lot of quote-unquote American companies or foreign companies, or however you want to put it, really American companies at the end of the day, return to the U.S. if there's a 15% tax rate, because that's not a lot more than what you can get in Switzerland or in some of the other domiciles. You can obviously go to zero tax domiciles, but there's reasons why you don't want to do that. So even a place like Ireland, 15% is awfully competitive and arguably even better. So if it comes down to 20% or 25%, I still think that'd be a really incredibly smart move. It just would lower the interest level of companies moving overseas. And I know from personal experience that if you have a company domiciled in Ireland or Switzerland or something like that, you do have to put jobs there. So jobs would return to the U.S., companies return to the U.S. I think the net tax impact probably wouldn't be too negative, although I know the estimates are that it would lead to a deficit. So in any event, yeah, I do have a company based in Switzerland, but to be honest, it is such a headache to set up a foreign company. You'd much rather just do it in Delaware, and I think Trump knows that probably better than any other president. So other than that, the macro picture is a bit boring. Commodities didn't really move last week. The market continues to do amazing, which gives, I think, a lot of hedge funds a lot of frustration. Most hedge funds I know aren't doing so well this year, at least the very bigger ones. And you have the S&P up 7% this year, and NASDAQ up 12%. There's a lot of anxiety about how do you catch up to that without being fully beta exposed. Obviously, there's some smaller, nimbler hedge funds that can make money on mid caps and small caps, but it's been, all this success. I mean, 7% in a year. What more do you want from equities? I think that's a pretty good return. Bonds are selling off, which is a little interesting. I think that whether bonds are in a bubble or whether there's more inflation or whether people are nervous about Trump, the bond market is seen as somewhat smarter than the stock market. The yield curve is flattening as well, which folks put on trades just on it's called flatteners and steepeners, which I've never kind of went through in the other financial lessons, but you'd be interested to look those up and see how they operate. But in any event, I find it interesting that the yield curve is flattening. And the sell-off in bonds are both sort of surprising to me. So in any event, I'm not a macro trader or anything, but I think it is worth noting. So earnings season started in full swing last week. I did a terrible job of keeping up with it, doing the best I could. I spent sometime today, updating models and going through numbers. Um, One earnings report stuck out to me, and that was Amazon's, and we'll kind of go through that. But let me know if you guys have trouble hearing me. Just give me an update on that. But in any event, the Amazon.com or Amazon Inc. I don't know. I think they might have killed the .com. I'm not sure. Maybe not. I wrote a little page on that, so we'll talk about that in a minute. But that's one earnings report that really stood out to me. Most of the pharma numbers I saw were in line. Lilly, Novartis, AstraZeneca, etc. And there were a few quarters that were kind of disappointing. GSK, I kind of am still torn as to whether it was a good number or a bad number, but we'll talk about that in a minute. I think there's something for everyone. Amgen kind of had bad numbers, and we'll talk about that in a minute. All consumer stocks seem to do terribly in terms of earnings reports. Coca-Cola's numbers are an unmitigated disaster. What exactly is happening there, I'm not sure. But these more mature companies, I think, are kind of fun to look at. Not only because the consumer is interesting, but also because I think there's some parallels in what tech is going through now, and kind of what will some of these companies look like 10 or 20 or 30 years from now. And the Cokes and Pepsis and Procters of the world were the growth stocks of the 70s and 80s, and now they're sort of these very kind of lumbering companies that don't grow or are shrinking. If you look at Coke's numbers, it's remarkable how fast, in fact, they're shrinking. And so obviously they're totally different industries, but growth, growing and becoming a big company and being a darling of the markets, and then finding you can't grow again is a pretty recurring theme, even in tech, in companies like IBM and others. So in any event, that's just something I'd point out. Celgene had another amazing quarter. Obviously obviously with Revlimid, this is a huge drug, now up to almost $8 billion in annualized revenues, and I'm shocked to see it continue to have 20% revenue growth in the midst of some competition, and a lot of talk about high drug prices. So I also think with Revlimid someday going generic, there's sort of the bigger they are, harder they fall theory. It's sort of tough when you build such a big company on the basis of one medicine, and that medicine is a small molecule. Celgene will be sort of one for the history books in terms of kind of how they'll kind of survive this. I don't follow Samsung too closely, but it was up about 10%. I think it was at about 2.2 million Korean won, which is about 2,200 US dollars. A lot of the Korean stocks trade in millions of won, which is kind of interesting. But Samsung had a really big number, and I think a lot of people don't understand how much their business is exposed to smartphones, especially their smartphones. And so it'd be interesting to go through their numbers at some point and show you that they're actually a little less exposed than others. So in any event, I didn't make a great earnings calendar. I'm sort of drinking from a fire hose, but certainly on Wednesday we have Facebook. On Tuesday we have Apple. A couple of pharma companies still left to report, but that's sort of what at least a few of the days for the next week look like. So it's also a good week to catch up on the earnings reports you missed from last week. So there were a handful of those, like Bristol Myers and others that I looked through. So in any event, everyone's sort of playing catch up these days when it's earnings season. So, all right. So some healthcare stocks that I thought were kind of interesting is there one company called Acorn got acquired, so it's up about 40%, and it's really interesting that their takeout by, I think it was Fresenius, is inserting a little bit of speculation that spec pharma companies have bottomed. Companies like Valiant and Endo have been very oversold, and I think Valiant was down like 25% on the month. And then finally, like a more mature, less levered company, I think Fresenius is actually pretty levered, but regardless, so you could think of some big, large, mature company with a lot of cash came in and it starts buying these companies for value. So it'll be kind of interesting to see if that's, that'll sort of be the case. Novo Nordisk had a so-called dead cat rebound. I call it the dead trashy rebound after my wonderful cat here. But that stock had been pummeled for quite some time, so it's interesting to see it bounce up a little bit. Vertex continues to do well. I think one of the biggest, I don't call it surprises, but sort of interesting pieces of news is the Brineura approval for BioMarin, and we'll talk about that in a minute. I made a sort of special slide on that, but Brineura will be an interesting medicine to watch. GSK again. I thought the quarter was okay. Advair continues to kind of do terribly, but the rest of the business is doing rather well, I'd say, especially the HIV side, the consumer side, the vaccine side. So I really like GSK, and I think this is probably one of the few large cap pharma stocks that's really worth focusing on. So other sort of mid cap type stocks, I'd be curious to look at Sarepta a little bit. I guess their CEO is out, so we should actually look at that while we're here. I have a lot of people that look at that stock that are friends, and I'm really kind of curious what's going on there. Tesaro was weak on launch the week before, but it's starting to come back. I think I mentioned last week that I thought that weakness was a bad idea on the markets with respect to the market's movement there. United Therapeutics is a company I've hated for a very long time, and I'm glad to see them starting to implode a little bit. Seattle Genetics continues to kill me on the short side. I don't know who thinks this company is this valuable, but God bless. Axovant's really interesting. There's a really crazy stock price movement there with David Hung, the CEO, former CEO of Medivation, who's did a good job at Medivation, joining Axovant, and Vivek Ramaswamy, the founder of Axovant, stepping aside. The wunderkind, I don't even know if he's 30 years old yet, stepping aside. It'll be really interesting to see kind of what happens here. If you recall, David Hung presided over the great success at Medivation, but their Alzheimer's drug was not successful. So, in fact, many people didn't like David and Medivation. Obviously, the proof is in the pudding. Medivation ended up being sold to Pfizer for $12 billion on the prostate cancer drug, but it's a little bit, I'm not sure this is in biotech, CEO success is a little bit hard to handicap. So I don't know if this move made that much sense to me, but in any event, we'll see what happens. Neurocrine, I'm still shorting it. We'll see what happens. Avexis is picking up some steam, as I thought. I noted last week. I think the stock goes to several $100s a share over time. We'll see what happens. It's a very risky company, and one company I've been watching very closely is Ipsen over the last many years. This is a company that's done amazingly well, a great turnaround in France. Really interesting company if you don't know it. And the reason I mention it is, the world is a lot bigger than the NASDAQ. You really have to pay a lot of attention to these foreign companies, and there's a lot of hidden gems out there. So what happened with Sarepta? I'm kind of curious here. I know a lot of people are sort of, saying that, let's see. Did the CEO get fired or something? Is that what happened, or what exactly happened? So first quarter of revenue was 16.3. That's a pretty good number. Revenue's above 100 million. That's pretty good too. CEO's still there. I don't know. Let's see. Someone was telling me that there's some kind of takeover theory or something like that. Let's see. Yeah, here we go. Informed the board his intention to resign after September 20th. So I guess the CEO has decided to resign, which is a little bizarre. And I guess they're firing everyone. It's very strange. It's really strange. So, we'll sort of see what happens there. I thought the number was good. 100 million in your first year for a rare disease drug, usually doesn't presage a $1 billion drug. But we'll sort of see how that goes. They might have to get approval in some more territories. So Yeah, I guess the Sanofi guy leaving because there's a conflict of interest is kind of interesting. So we'll see what'll happen there, but let's see here. So yeah, the market cap is only 1.5 billion, so I'm not even sure they need to hit 500 million in sales. That would in fact be worth probably about 5 billion in revenue. So I think that it looks pretty attractive. You know, the way revenue is recognized in pharmaceuticals these days, they'll probably beat that number is my guess. So, you know, Sarepta looks like a promising on. Just off the cuff. I've known this stock for almost a decade now, or maybe longer. So anyway, we're going to talk about Brineura in a minute here, approval from BioMarin. I mentioned the AveXis data at AAN. I'll quickly show it to you just because it's so fascinating. AveXis is the SMA, spinal muscular atrophy company that I like. And you can see their data was updated a little bit at AAN, and it's rather breathtaking data if you look at it. It's this is a uniformly fatal illness, and 10 of 12 of these patients sat unassisted, which is something none of them can do. And they finally gave out some patient videos, which I think a lot of people have been treating this company somewhat skeptically, and I think the final kind of showing that there's actual patient videos, I think is pretty impressive. So 15 out of 15 event free at 13 months. This is usually these patients have an event by 6 or 12 months. And you can see here that 75% of patients would have been expected at that point to have some kind of event. So really impressive. Nearly all type 1 patients require nutritional and respiratory support by 12 months of age. They can't swallow or speak. And you have you know, really the opposite happening here. So to the extent there's a miracle in medicine, this is pretty much it. And if you think about kind of what the potential of a drug like this is with respect to revenue, I think you can do $1 billion or $2 billion, maybe even $3 billion pretty easily, in which case this company could be a 10x or 20x. The stock's $80 right now. I could easily see it go to 500 or 1,000 if all of these things keep checking out. This is one of the worst diseases known to mankind, spinal muscular atrophy type 1. Really a horrific illness, so great on this company. There's an interesting article in the New England Journal of Medicine. It's the first article in the most recent issue. Got it over here. It's called Overexpression of the Cytokine BAFF and Autoimmunity Risk. And what they did is they took a group of patients in Sardinia, which I guess is in the Mediterranean. I think Sardinia is like an Italian property, right? It's like sort of like Sicily. Anyway, they did this GUS study, and what they found is this the BAFF cytokine was associated with MS and SLE. And what was really interesting is that the editorial talks about how the more BAFF you have, the more multiple sclerosis or SLE you have, but the less BAFF you have, I guess, the more likely you are to be resistant to malaria, I believe. So it's a pretty interesting kind of paper here, and it's sort of BAFF's been drugged, which makes it a little bit mysterious because the drug attempts at BAFF have not done that well. So someone said it was a baffling observation, but regardless, it's sort of an interesting, really interesting paper, especially for any of you old enough to remember the first BAFF drugs. Excuse me. So in any event, a baffling association between malaria resistance and the risk of MS. So Sardinians have one of the highest rates of centenarians, people who live to be 100 years old or more, but also the highest incidence of MS. So really super interesting findings here, published in the New England Journal. There was an article in JAMA about medical marijuana, and it's sort of consistent with some of what I've been talking about where medical marijuana is legal now almost everywhere, but doctors don't really understand how to use it or what it's useful for. And the article does a good job of explaining the sort of conundrums behind that. If you want to read it, it's Rubin is the author. It's the only author, and you could read that in JAMA. The Novartis number for Cosentyx was pretty incredible. They're doing about $2 billion run rate right now, and the drug just launched. So it's really like a fascinating success for Novartis. You know, they had a mixed quarter. Gleevec fell a little faster than I thought it would, it's sort of been hanging on a little bit longer than I thought it would. So interesting to see sort of Cosentyx continue to kick butt. And then from the Amgen report, I thought it was really weird to see the Repatha just not selling well at all. A 200 million run rate at this point, but not particularly. The trajectory is pretty modest. I don't think this will ever be a $1 billion drug, or if it is, it'll take a long time, and there's certainly no expectation that it'll be a multi-billion-dollar drug. So I think that it's a pretty sort of pathetic situation for the PCSK9 drugs, and it also highlights why I think Medicines Company is going to be a great short, because that company is predicated on their PCSK9, I guess, silencing RNA, and I think that'll sort of be, it's a disappointing market, so it's going to be a good short for, it's going to be, Medicines Company is a pretty good short. With respect to Bristol Myers, Eliquis, it's Pfizer and Bristol Myers sell this drug together, I guess. I thought they had a really great quarter. Q1 was a tough quarter for a lot of pharmaceutical companies. There's a lot of stocking, destocking, rebates, all kinds of things happen in Q1 that are not kind of repeated, and so they had an up sequential, which you don't see too many drugs doing that right now, even growth medicines. So a wonderful quarter for Eliquis, and I think at this point warfarin is starting to get kind of eliminated. You know, people are just using Eliquis or Rivaroxaban, Xarelto, and basically I was skeptical that an old drug like warfarin could die so quickly, and it really has been pummeled by these new medicines. So kudos to J&J, Bayer, Bristol Myers, and Pfizer for kind of, you know, upgrading the warfarin world into kind of a cooler, much cooler medicine, better medicine here. So the Neurotrope data is on Monday. I think this is a pump and dump company, pump and dump stock, kind of a garbage situation, but it'll be really interesting to see if these guys have cured Alzheimer's or not. Oh, I didn't know the stock goes up so much on Friday. I have some short here. So it'll be really interesting to see. I guess they said Neurotrope to release results from phase 2 clinical trial tomorrow. So either the world has a lot to celebrate with a ton of new hope for this Bryostatin 1 drug, or maybe the drug doesn't work, and we'll have to sort of see. And sometimes companies like to kind of lie about that a little bit, and I wouldn't be surprised if that happens here. So we'll kind of see what happens with Neurotrope, but I'm very, very skeptical of Neurotrope. So Brineura got FDA approval. This is a drug for Batten disease, really a broad term. CLN2 is the real name of the disease, and it's an enzyme replacement therapy. What's interesting about it is it's dosed intraventricularly. So what does that mean? Well, basically it's dosed right into the brain. So we'll show you how to use it in a second, but it's the first time that any medicine sort of works this way. So let's take a look at the prescribing information. But you can, hopefully it'll say here somewhere how you give it, but what the technique is administered into the cerebrospinal fluid by infusion via surgically implanted reservoir and catheter. There's a few of these. The Codman-Holter catheter is it looks like the standard catheter, but there's also this B. Brown catheter. So I think it goes right in your spine, and they kind of implant a device there to inject the patient. So with respect to the no, there it is. It doesn't go to the spine. It goes into the Ommaya shunt, I guess. If you can do it this way. This is usually called Omayo line. But, wow, pretty incredible, huh? So you just, yeah, that's how you do it. Yeah, I thought it was in the, implanted in the spine, but, well, I guess not. So yeah, it tells you a little bit about how sick these patients are. They usually die by the time they're 8 years old, so or 10 years old. So it's very much a it's very much a very tough illness. So I'm glad that the first drug ever is available for it. But I noticed that the clinical data was very skimpy. Only about 24 patients enrolled in the clinical trial with no control group, no real randomized clinical trial. And that's how sort of the SMA trials work too. And I wonder if there's sort of a slippery slope here of how much real data we're getting for some of these rare disease drugs. Like if you take a look at this data, it's sort of a natural history cohort that they took, and you can see what the decline levels are at 900 days. And here you can see that the Brineura patients didn't decline as quickly, but a lot of this data is sort of subject to manipulation, and rare disease companies are no different from any other company in the sense that they're trying to get their drugs approved and sell them. And to do a 20-patient clinical trial with no control group, no placebo group, obviously these kids are very sick, but they do randomized controlled studies in cancer patients that have 6 months to live. So it's sort of a little bit of a crazy thing, but the 96-week data was really good. Those patients are still doing well, which is, I think, unheard of. And at this point, it's very hard to sort of hard to see that, at 96 weeks, a year and a half, none of the patients got worse on Brineura, and most patients got a lot worse in a natural history cohort. Again, there's ways to sort of, theoretically manipulate or sort of stretch that data, but clearly the FDA felt it made sense to give them FDA approval. So hats off to them and the Batten community. There's 1,200 to 1,600 patients with this illness, is what has sort of been the what the number BioMarin is saying. I don't know if they released pricing. Let's take a look at that. It's an ultra orphan disease. $700,000. Okay, that's a lot. 27,000 in infusion. You need 24 of those. So, okay, yeah, $700,000. That'll do it. So there you have it. And I've talked frequently about how when you have this few diseases, this few amount of patients, excuse me, that price needs to be high to sort of pay for the effort and the expense of treating such a few amount of patients. But I will say that this is not a tiny amount of patients, and this will be, you can do the math easily in your head, this would be about $1 billion medicine if they got all those patients reimbursed. Obviously, they're not going to get all of them reimbursed. So it could be, maybe $500 million product. But, the whole thing, soup to nuts, it doesn't cost a lot to do a 24-patient clinical trial, as you can imagine. So maybe, this whole thing costs $50 million. So if you think about it, that's a 10x return every year on the $50 million. So it's a pretty pretty good business still, but $700,000 seems a bit much. It's pretty similar to Daraprim, that's right. So at $700,000 a year, every year for the rest of the person's life, it seems like quite expensive relative to some of the other drugs I know. Anyway, I looked at a bunch of tech stuff this week as well. I thought the Twitter quarter was terrible. I saw the stock jump. I think this company's going backwards. Like the revenue. I understand that the member numbers are up, or the user numbers, MAUs, etc. are up. Their I've never seen an MAU definition that's like as long as Twitter's. It's like 2 paragraphs. But I don't get why Wall Street liked that quarter, and I think that it sort of showcases the company's finally maybe doing some cost control, which they've needed for a long time. So we'll kind of see what'll happen. But I don't believe the MAU numbers. So when you look at the revenue numbers, it's very... I mean, I don't know too many tech companies where revenue is declining. That's sort of, I think, to me, it's sort of an embarrassment if you think about it. Like, how many times do you see, we'll go through Amazon in a second, but how often do you see a revenue decline? It really just doesn't happen too often. And I don't see, it's sort of weird. Here's the revenue decline, down 8% year over year. That's pretty nuts if you think about it, right? You really just don't see that a lot. I mean, Facebook's growing 40%, Amazon's growing a ton, Google's growing 20%, even SAP is growing 10%. You know, and Microsoft and Oracle are at least they're flat, but down 8% year over year is I mean, I just don't get it. You're never going to get back to growth usually in situations like that, even with this sort of fake DAU data. I'm very suspicious that, you know, that'll translate to real revenue. So I'm very kind of skeptical here. SAP versus Oracle, these are companies I've looked at for quite a long time, and you know, SAP continues to grow pretty robustly while Oracle is kind of running to stand still. And one company does a ton of acquisitions, Oracle, and SAP doesn't. So it's interesting to see SAP kind of outmaneuver Oracle, and we'll see numbers from Salesforce and Workday and some of those other companies. It'll be kind of interesting to sort of see how that goes. Amazon, I'm going to go through in a second. Waymo is kind of interesting. I noticed that Waymo, is starting to expand its services. I think it seems like they're number one. They're in the lead here. But if you look at the quarter, I'm starting to get somewhat suspicious of Google. So I'll give you the exercise that I'm going to do, call it a deep dive, but I'm doing this exercise where I'm taking all global companies. There's 28 trillion. It's kind of, I guess I won't show you the data yet, but I'll give you kind of the mock exercise, which is that there's 28 trillion US dollars of market cap, and the price to sales on that is about 4.4. So there's about 6 trillion-ish. These are all listed American companies. So I have the foreign listings too. And then you have to think about private and SMB and stuff like that. But let's just take some of this data, and you think that you have roughly, so this is the analysis I'm doing for Google. So market cap, revenue, and then SG&A as a percentage is roughly 15% for my data across the board. Now, sales and marketing and G&A get split up something like 7% and 7%, but it could be 8% and 6% or something like that. So sales and marketing is roughly, and I think some of you probably know where I'm getting at here, but I think Google's starting to get pretty saturated is my point. So you have about $480 billion of sales and marketing expense. And so if you think about the revenue of Google's revenue is $100 billion. So you're sort of basically, they're at 25% market share, not of like internet advertising or anything like that, but all sales and marketing expense, period. That includes salespeople, marketing people, advertising people, the ads themselves, etc., etc. And obviously there's more than the 28 trillion in market cap, but that's a lot of, I mean, that's every public company in the United States, including ADRs, level 1, level 2 ADRs, not level 3 ADRs. And so if you add some of the other foreign markets, maybe it's 50 trillion, but I think that what I'm saying is that, again, I'll get better numbers, but it's really hard for me, and you'll juxtapose this against Amazon in a second, but it's sort of hard for me to see that the disruption will continue, that on balance, Google is now more likely to be the victim of disruption than where they've been, which is disrupting the advertising market. So I'm somewhat suspicious that Google can grow 20% forever, or at least for many, many years to come. Now, the stock isn't exactly pricing that. They don't have to do that for much longer. But it does feel like when you start to see things like the recent kerfuffle about some of the advertisements that Google's throwing out there, that maybe they're stretching themselves a little bit to keep that growth up, that maybe their growth will start to come down to the 10-15% range. Whereas I don't think the same thing's happening with Amazon, which I'll go through in a second. But if you do look up Google, my Google model, you'll see that, again, thankfully, it's not sort of priced for an impossibility. Even with the company starting to mature around 2020, and there's sort of a step ladder from the current 20% growth rate down pretty quickly to zero, you still have a stock that has a little bit of upside. So, keep that in mind. The stock is actually not too expensive. But again, the balance that they could get disrupted makes you wonder about that discount rate. The company's entire business comes from one business line, which could get disintermediated. Again, unlikely to occur too quickly, but not the kind of stock that I love to buy, to be honest. Now, if I'm wrong about all of this, then maybe growth will continue for at 20% or so. But I doubt that other bets in Alphabet will really fix the company. Now, they could. Their hardware push is somewhat interesting. They talked a lot about that on the call. But I think that the interesting fact is that really they're the ones that are probably going to get disintermediated. That the shoe's now on the other foot. That they have 100 billion in revenue. 28 trillion on market cap, is spending about 480 billion on sales and marketing. Again, maybe 2/3 of that is advertising. And again, Google, these numbers should be grossed up a little bit. Maybe that they're higher numbers, but regardless, we are looking at serious penetration problem for Google. Now, I'll talk about the opposite, I think, problem actually with Amazon in a second. Just want to make sure that I've got all this stuff. Oh yeah, Google also entering the cloud quite a bit late here, and I'm not exactly sure what they're adding to the picture here, but they talked about how much they're going to bet on the cloud, and again, I think it's really more, they're sort of they're number 3 after Azure. It's sort of telling that, or maybe number 4 after IBM, but it's sort of telling that they're sort of, of the tech giants, they're the latest to the cloud, and that sort of, I think maybe speaks to decision-making process here. And again, with respect to advertising, we may be at a top. So of the big tech companies, Google and Apple are ones I don't like. So in any event, Elon Musk is talking about underground roadways with elevators. So I just wanted to point out that he is crazy and that I don't trust him. I don't think he's the genius everyone thinks he is. Again, I don't hate him. I don't think he's a scam artist or anything, but I don't get the hype, kind of. I think Tesla's not that impressive of a company. We'll see what happens to SpaceX. I think of all of his companies, SpaceX is probably the most interesting, but even there, I'm not 100% sure what the game plan is. So I'm a little bit suspicious of Musk, and the guy has an idea every 5 minutes. The Hyperloop, I think, is a pretty bad idea. I just, he's sort of like a kooky kind of version of Thomas Edison who doesn't actually get stuff done, in my opinion. So anyway, we'll sort of see what happens with that. So on Amazon, I listened to this call and built out my model a little bit further, and I think the stock's worth about $1,600, which is some good upside from here. It's about $900 at the moment. But I think AWS will actually outgrow retail. So Amazon will have more revenue from AWS than the retail business in a handful, 5 years. So If that's surprising to you, then the rate of growth for AWS is pretty strong. And if you think about what I was talking about earlier in terms of penetration, AWS, let's take a look. AWS has revenue right now of, I don't know, 40 billion, trailing 12 months, 44 billion. And so the point here is that if you think about all technological business processes that can be automated with Amazon, you're really talking about a number that could be 500 billion or $1 trillion. And they're creating their own market in the sense that they're going to be moving from these sort of first-gen opportunities like storage and compute, which I use, S3 and EC2. If you don't know these products, these are core AWS products. And so basically, these are really kind of first gen. In fact, some of my teammates at my software company say that, well, we shouldn't use compute from AWS. We could do it ourselves. And even someone like Netflix is wasting time with storage because, they should just build their own data center. But here's the rub. I think over time, what's going to end up happening is all the AWS business will shift from storage and compute, or maybe these will even become loss leaders, or maybe they are now. And the must-have proprietary tools that they're building are the ones that are really going to be the sticky stuff that you just can't build on your own. You can't build machine learning on your own. Maybe you can if you're Netflix, but 95% of Amazon clients can't and won't build their own proprietary cool tools. I know they have a new exabyte database tool. That's not buildable on your own. There are things like that you just simply must have. So I think that you're going to have AWS continue to rock and roll, and companies like IBM, Infosys, and many others will kind of continue to crumble as Amazon eats their lunch. And then you're just driving more efficiency at actual companies. People love AWS because they don't have to spend a lot of money on technology internally. It's sort of a win-win from a customer perspective, but from an Amazon perspective, I think they have a lot of, and certainly a competitor perspective, I think they have a lot of opportunity that's not that clear vis-a-vis companies, again, like Amazon, Accenture, Infosys, Cognizant, etc. Companies that really are going to have a lot of issues. Again, some of those companies will still do fine, but I think that you're gonna be in big trouble if you need some of Amazon's really proprietary, cool new tools that they're building. Some of which, like Redshift or I don't know, I hear about a new one every day practically from my developers who go gaga over some of that stuff, like Amazon Lambda and stuff like that. Azure isn't that good, I think, compared to AWS. I agree with you. So anyway, that's the shift we're seeing. It's sort of like a shift within a really fast-growing entrepreneurial business that I think things like S3 are not that relevant. So Amazon will be roughly $1 trillion company at the price I'm predicting. So God bless them. But I like Amazon. I think, again, when it comes to trying to get scale on a compute side, they are the place to be. Scale on a storage side, again, where else would you go? But then as they get to some of the proprietary tools, I'm pretty impressed by it. So there's a website called quantnews.com. I'm going to start posting stuff from this, but I thought it was a pretty good resource actually for people who are interested in quantitative investing. So feel free to check that out, and it's got my endorsement. So shoot over some Q&A. I'm going to do that for the next 20 minutes or so. Next deep dive will be, again, a little bit about that peak Google hypothesis that I've got. I'll talk about Theranos. I really want to dive into the Federal Reserve balance sheet because I think that's kind of an interesting thing that not too many people look at. I always wanted to talk about Theranos and kind of what happened and what the lessons are there. Again, the goal here is maybe a little bit more entertainment than education, but just something to talk about and listen to and something that's interesting. And I think I have some really unique perspectives on that. In fact, maybe I'll add Valiant, Theranos and/or Valiant post-mortem on kind of just what happened to these companies and how did they mess up that badly. Someone wants me to talk about ETFs. I don't understand why exactly, because ETFs are a little bit self-explanatory. There's ETNs, so a little bit of alphabet soup, but their ETN products are kind of interesting. We'll talk about that. So let's look through some Q&A. I'm gonna minimize my let's see here. Minimize my display there and return my glorious face here to the big screen. I'll open up some of this mail. All right, not too many questions. Or I thought you guys were going to email me questions. What gives? You can email me right now, Martin at thotpatrol.com, thoughtpatrol.com, and I can answer them. So one questioner, Be Great, asks, what is your take on pharma companies selling weight loss drugs? The demand is very low for these drugs. Was the obesity market misjudged? Obesity seems to be a continuing epidemic. Yeah, that's a great question. You know, obesity drugs are not selling well, and it's drugs like Brineura for diseases you've never heard of that are selling well. And I think there's sort of two things going on. First is I think there's some physician sort of nervousness around prescribing general medicines. It's sort of strange, but like drug companies no longer want to pitch primary care physicians as much. So there's just sort of this generic kind of trend against promoting drugs that way. It's just too hard to sort of target physicians, and you have to sort of blanket the country with ad campaign. And if you look at all those drugs were not launched by Big Pharma, and if they were, maybe they would have sold better. But Vivus launched their drug by themselves, no partner. Arena had a sort of mid-sized pharma, Eastside, launch it, did not work well. So, you know, basically part of it is, you know, just the launch and sort of the physicians you're targeting. And the other part of it is they're just not high-impact medicines. You know, losing 10 or 20 pounds is not exactly something that, they didn't do outcome studies that showed that will reduce cardiovascular events or other things like that. So that's sort of what's going on with obesity drugs. You're wise to sort of notice it, and that trend by folks like myself to focus on rare disease drugs has been very profitable. And again, you can feel secure that your high impact medicine is worth a lot. Like Brineura's $700,000 versus the obesity drug for a handful of hundreds of dollars. So in any event, there's one question. Are cryptocurrencies the new tulip bubble? It seems a new one springs up every week. So I'm studying Bitcoin, Ethereum, etc. I don't know. I think that you know, this requires a deep historical understanding of what currency and fiat and things like that are. I don't think there's a simple answer to that. On the one hand, we're tempted to laugh at the ridiculousness of a entity-less coin, but at the same time, you know, there's other things that would advocate against that. And to the extent that we have this sort of very carefully traced setup of money, clearly there's some superior parts of things like Bitcoin and Ethereum that don't exist for some other currencies. So a decentralized currency could be, Bitcoin could continue to become more of a phenomenon. I think more comfortable with it if there were more sort of more of a focus on sort of backing that with something. But again, it's all hypothetical, and again, I have a lot of reading to do. Could you take a glance at Starbucks and your thoughts on the company? I haven't looked at Starbucks in a while, but I'll do that. I appreciate that. I have one fellow here guessing about the outcome of my forthcoming trial. It'd be really interesting to see why he's guessing the way he is. Let's see. Frank asks, could you please give your thoughts on this new development with Fannie Mae? Seems like the government is getting students to leverage government debt to buy more debt. How can we prevent students from entering a life of indebted servitude to the government? I mean, having never taken a student loan, I'm sort of, I don't totally understand the dynamic, just having zero personal experience with it, but I have read about the delinquencies and some of the Parent Plus program, which is somewhat problematic. It's difficult, it's really difficult to sort of guess. The sort of student loan stuff is sort of something I've never really looked at too carefully. So I appreciate the question, but maybe it's something I'll look at in the future. Get my Post-it note and remind myself to. These are a couple of pretty good questions. Student loans and Starbucks. Let's see. Should I continue to hold Regeneron? I mean, I like the stock, but I'm not going to babysit your portfolio. You'd have to pay me a lot of money to do that. Any introductory statistics books to recommend? If you want to go crazy, you can read some of the really old texts um, by like Boole, who we use the phrase Boolean now, but Boole and Bayes were two of the greatest statisticians ever. But any college level statistics books, econometrics book, I think is worth a read. Very important to do that in my eyes. I couldn't tell you one specific book though. But if you did want to lose your mind reading Boole and Bayes, you can try. They're not easy. The primary texts there. Thoughts on gold? I don't really follow it. I think that gold doesn't have the utility that oil does, so I've always preferred oil. I've advised Soldier Boy accordingly to go long oil. So Soldier is a very dangerous man to deal with. It's not the kind of person you want to give a stock pick to, because if you're wrong, the Draco comes. So I hope that oil goes up. Is Python a good place to start for mastering software development? I'm probably not the person to answer this, but I think JavaScript is a better place to start. That's just my 2 cents. Is there a way you can quantify your strategic perspectives on the stocks you're evaluating? I'm not sure what that question is asking, to be honest. Do you think Valiant is a doomed company? Yeah, probably. They need to do some kind of recap or some kind of divestment or something. I mean, I could see them over 5 or 10 years turning around, but it's pretty doomed, yeah. What's your take on student debt, which exceeds $1.2 trillion with 7 million people in default? So $1.2 trillion, if you think about it, it's maybe not as much as it sounds. So let's see, 1.2 billion trillion divided by 330 million. So that's only $3,000 a person. That's really not that much. It's sort of one of those things like I talked about in my Princeton speech, where your intuition is that's such a big number, but logic would actually tell you $3,000 a person is really not that much if you think about it. In fact, if you really think about it, the present value of income created probably is a good deal. But again, I'm not a student loan expert. Let's see. Waymo, what do you think of Waymo's future in litigation? I don't know about the litigation, right? It seems like something dirty happened there. What do you think about the future of robotics, shipping, logistics? Obviously, we live in a time where all that stuff's super important and changing very rapidly. If you look at Amazon, fulfillment as a percentage cost for them is a huge percentage cost. If they could save 20% on that fulfillment number, right, it would revolutionize what it means to be a retailer or be in e-commerce. So, it'll be interesting to sort of see what happens there with logistics. But, I do think robotics are going to play some part in logistics. I just don't know what. And again, it's beyond my pay grade, not really what I focus on. But definitely, very cool. Technology is so open-ended. It's amazing. Did you follow the Home Capital Group fallout in Canada like Bear Stearns? If not, what do you think of subprime lending in general? I didn't follow it. I'll take a look at it. It sounds interesting. Canada's got its own weird real estate things happening right now, if I'm not mistaken. So I'll take a look. For another time, could you talk about your setup, Excel models all linked together, and the add-ins you use? Sure. Yeah, I'll do that someday. I've never made like an intro to Excel, but if there's anyone who can do it, it's probably me. Your startup is ugly. Okay, I don't know what that means. All right, can you make a quantified evaluation on strategic characteristics like the development of market share, like a multiple to evaluate a company instead of the traditional DCF method? Cash flow is cash flow. My DCF method isn't exactly traditional. I have some tweaks to it that I think yield superior results. When I think about the kind of like, how do you design inputs? That's the creative part of modeling that I think I'm good at, which is that you have to sort of artistically derive revenue, which isn't easy. So, oh boy, lots of questions piling up. VRX, a lot of money could have been made on the short side. Did you see that coming? If so, at what point? What were the red flags? I'll do the Valiant postmortem, but briefly, I didn't really see it coming. The revenue performance of the assets was unexpected. I think everyone was surprised at the weakness in some of the numbers. The acquisitions and the leverage, we all signed up for that. Not being a shareholder myself, but the shareholders and the short sellers signed up for that. It's sort of just a double-edged sword. But that's what leverage is all about. If you've ever leveraged up an investment account, you know that the gains are magnified and the losses are magnified. And it's sort of up to you to make sure that you don't have a loss. In Valiant's case, they magnified some pretty poor performance there. So that's sort of what happened there. I think the red flags were, again, they were sort of surprising when they had a few bad quarters. The stock sank so fast, there was no way to sort of see ahead of it. But some of the strategic moves were questionable. They bought businesses like Bausch & Lomb that were very high-touch businesses that they sort of messed up. So the leverage is obviously another characteristic, so red flag. Let me just take a look at something here. Oh boy. I'm seeing something not great. Give me a moment. Some not so good JavaScript here being run on my computer. Alright, thankfully Chrome is very secure. Alright, back to work. I've seen that Shiller PE ratio at 27 to 30 times earnings. Is this and the standard PE ratio for the S&P not relevant or a concern in times of serious market correction? So you have to adjust for financials and energy earnings, which are at sort of low, sort of temporarily low. So I think if you adjust that, the market's not too expensive. Let's see. Have you thought about making a drug for hallucinogen persisting perception disorder? No, I can't say I know that illness too well. So we'll sort of see. What's your reasoning for the negative view on Elon Musk and Tesla? I mean, it's just sort of the Tesla's not been very successful by many measures as a business, and I understand. I'm a growth investor. I get that it takes time for some of these numbers to sort of catch up, but I think there's sort of it takes time, but I just don't think that they're going to deliver. And most people have the same sort of. If you read the bear stuff on Tesla, they'd have to be a Ford-sized company. They already are a Ford-sized company, but their shipments would have to grow disproportionately to sort of get there. So biosimilars, I think, will be good opportunities. No doubt about it. Let's see here. What are your thoughts on superbugs and antibiotics being less effective for them? I think that antibiotic drug development is the seesaw. It takes sort of outbreaks for drug companies to get excited about making antibiotics, and then it kind of gets quiet for 10 or 20 years. So there's sort of like, it comes in cycles. So we'll sort of see what happens. Best majors in college to graduate from? I don't know, and work in the finance industry. I mean, economics and finance are good majors. Computer science, philosophy, those are all reasonably good majors. History, math, those are all good majors to sort of work your way into that discussion. Let's see. GABA receptors. Can you explain the mechanism of actions for benzodiazepines? It's a good question. Benzos have strange mechanism, very complex, but I don't think it would help too much regarding investing and things like that. Do you take macroeconomic factors into consideration? Not really. Do you think that the real value of money plays a large role in valuation? Actually, I do think that the changes in the value of money are very important, in fact. But most macro factors, I guess I don't think about too much. And Warren Buffett had a lot to say on that I think is pretty instructive. Genmab is, an incredibly, the company stock has grown up. Some Danish people here is the Danish biotech darling Genmab, but the stock price has gone up a dramatic amount. Opinion on starting a career in investment banking. It's a good career. Make a lot of money. Work very hard. It's interesting work. It's just a high pressure job. Very high pressure job. Takes a lot of effort. Let's see what else. If you're just getting into the stock market today, what would your advice be? I actually made about 20 videos about this, so you can go watch those. What do people say? What does it mean when people say audit the Federal Reserve? Well, I think the Federal Reserve is not too transparent what goes on there, and they control lots of money. So I think that's sort of what, that's sort of the theory there. The Zeitgeist movie. No, I've never heard of that movie. It sounds interesting. It's about debt and propagation of debt. Let's take a look. Entry-level books explaining Gödel's theorem. This is an investing webcast, not a math one, so you can find a math webcast. I'm 17. Hang on one second. I think my cat's waking up. What do you think about quantum computing? I don't know. I certainly know what it is. I'm not an expert in it. I don't know who's leading in it and who isn't. Who's to say Trump's tax repatriation efforts won't lead to companies allocating funds to stock buybacks and dividends? Maybe. Maybe they will. I mean, the tax repatriation is only part of it, right? The tax rate is what's important. Yeah, capital allocation is an interesting topic for future. Definitely interesting. Do you believe the activist style investing will continue to generate alpha over the next 2 decades? Not really. Not really. Activism's kind of become a meme, What else do we got here? Thoughts on SSRIs and what knowledge do you have of advancements in that space? Oh, a lot. SSRIs are modestly effective medicines. They work, not too well, but there's some new antidepressants coming, so stay tuned. How high will Stryker go? I don't know. I don't look at Stryker too closely, but I'll take a look at Stryker. What investing styles do you think will generate the most alpha in the future? I think private equity has a systematic barrier to entry that people don't like. So private equity, quantitative investing as well, distressed debt investing as well, things like that. I think equities are kind of the public equities is the last place I'd be. Thoughts on day trading? Have you ever done it? Yes, I've lost a lot of money trying to do it. I'm not very good at it. There's people who are great at it. I'm terrible at it. If I found a way to monetize on trolls, would you be open to the idea? Of course I would be. What would you do differently in your self-learning process for finance and biochemistry if you were 19 years old again? I would read more published literature. Published papers are the key to education. Textbooks and things like that are important too, but published literature, would be my answer, I guess there. What contemporary investors do you have the most respect for? Boy, it's a short list. No, I'm kidding. There's there's people I know that I shouldn't name because I know them well. Some of them are in the pharmaceutical investing world. I think Coatue Capital is pretty good. I think Peter Thiel is probably one of the best investors alive. He's sort of in new generation. Let's see, it's a tough one. Yeah, I think if I had to pick a hedge fund that's like really new school in the last 5-10 years, Coatue is up there. Some of the quant funds like a Two Sigma or something like that. In terms of like a deep value investor, I don't know. I think that style is a little dry. Again, I have some people I know that are very good, but anyway, that's a great place to sort of end the discussion. Really appreciate it. Got a lot of questions here, so Sorry if I didn't get to yours, but this is a great time for me. Thanks for coming. I hope you were entertained and maybe you learned something. So see you next week. Same time, same place. Bye, guys.